In this video, I'm going to explain the mathematics behind profitable trading for living. It's not complicated, but it's really essential. So please watch this video and learn how to make trading for living, even for yourself. Let's get to it. Hi, my name is Thomas, also known as the Mr. Breakout. I'm a breakout trading specialist and an internationally recognized trading author. I've traveled the world trading breakout strategies, and on this channel I will teach you my own way of finding the right trading opportunities and making real money with breakout trading. Welcome back, breakout trading fans, breakout trading specialists, and all the other traders. So we're going to talk about the essential mathematics behind profitable trading or trading for living. So if you plan to trade for living, if you're new or you're more advanced already but want to make this final leap, please bear with me, because this is something that not many guys out there talk about, because it's not so sexy like talking about indicators, right? Like everybody's indicators. Whenever I put a video about indicators on my channel, there's a lot of views and likes. Well, this is not so sexy, but it's more important. So seriously, if you're serious about breakout trading, you need to watch this video. So everything I'm going to talk about is basically really simple, essential, but I would say the very core, very quintessential mathematics, how profitable trading works. And I'm going to do a lot of modeling in this calculator. By the way, you can get this calculator completely for free at tradeforlivingcalculator.com. That's the address of the calculator. I'll leave the link below this video. So if you want to check it yourself, just click on the link below this video. Otherwise, you can find it on tradeforalivingcalculator.com. And now let's begin. So first of all, everyone, when starting with trading, believes that profitable trading is about having or being right? Like having the knowledge where the market will go. That's a very big mistake, and that's the wrong perception of beginning traders, because they don't understand it's way more complicated than that. It's not about how often you are right. It's about how much you make when you are right and how much you lose when you're not right. And I know it might, bear with me, I know it might sound a little bit cliche, but it's really that important. At the same time, also that's simple. So the most traders at the beginning are preoccupied by this metric, which is called win rate. So win rate is telling us how many trades will be profitable when we enter them. So let's say you enter 20 trades per month, one trade per day on average. In that case, if you have 50% win percentage, that means 10 trades are losers, 10 trades are winners. And you can make a lot of money with 50% profitability. But what many beginning traders do, they try to push this as high as possible to even 70, 80%, which causes very severe overfitting, and the strategy is being overfit with this in sample win percentage rate being too high, do not perform well in live trading. That's another story. The story I want to explain today, the way more important thing is that the win rate itself is not so important. What's really important is the average trade and average loss. And that's where everything starts and everything ends. So every professional trader trades with stop loss. And stop loss is basically what defines his risk. So stop loss is what you lose when the trade doesn't not go your direction. But also, when the trade does not go to your direction, doesn't necessarily mean you end up on the stop loss. Because, for example, you can be a day trader and your exit can be at the end of the day. Now, you can enter a position and you can have a stop loss, let's say $150, But until the end of the day, the market can be just choppy, and you can end up with a loss like $50 or zero, right? Like be break even. So losing trade does not necessarily be losing at its stop loss all the time. And similarly, the winning trade does not need to be the full winner as predefined, let's say, by profit target. So that's why we have these metrics, average loss and average win. And basically what we do, we just take certain sample size of trades and we see what is the average of the profits and average of the losses. Now the point is that we want this to be a positive ratio. This is called reward risk ratio, and ideally we want reward risk ratio at least 1.5. That means your average win should be at least 50% higher than your average loss. Really good numbers are, let's say, 2 to 1 or even higher. And especially with breakout trading, you sometimes can have lower profitability or win percentage, not profitability, even 40%. Now, what I want to show you is even if you have 40% and you have positive average, average loss versus average win, if you have positive reward risk ratio at least 2, you're still making money on average trade and you're still profitable. That's the very essential thing, okay? You don't need to be right even 50% of time, yet you can make a lot of money. The key is to build strategies with positive reward risk ratio. Now, how do you make strategies like this? There are a lot of advices on this web, and also there is a link in this application which gives you pretty clear and good guidance how to start. That's another question. Now let's get back to this mathematic. So we know that we need positive reward risk ratio. That's way more important than being right all the time. So if you think about it, if you have positive reward risk ratio, you can literally flip a coin, and even with a coin flip, theoretically, and I'm now talking more about a theory, you can make money, okay? So now, how does this translate to practice? So let's say you are E-mini S&P day trader. So E-mini S&P day trader, usually with today's volatility, the average loss could be much higher, I would say about 500, but on a good day, you can make on average, let's say 1,000, okay? Or 800 or whatever. So as you can see, I can be E-mini S&P trader, have a strategy with 2.20 reward risk ratio, where basically my stop loss can be $500, probably a little bit higher, depends on the time frame as well, and profit target twice that. Now, if I hit my profit target only 40% of times, I'm still profitable. This equity curve shows random entries, okay? So we're basically randomly sampling entries here, and randomly, once we create this random number of trades, you can see that, or these trades which we randomly sample, 60% of them end with $1,500 loss and 40% with 1,000 profit. So you can see, if I resample now, have a look guys, okay? So I'm still making money. Are you getting that? Like I'm still making money. The distribution of profits vary. It really depends because the order of trades, winning, losing, it's quite random. We have to embrace that randomness. But if I keep my edge in terms of win percentage and average win and average loss, and I just keep trading, my equity curve will vary, will have different outcomes each month, each year, each 6 months, whatever, but I'm still making money. Now, even if and this is something you need to understand, even when I drop to 35%, I still am at least not losing money. if I do many sample size, many resamples of the equity, in fact, on more than not, I'm still making a little bit of money, which is really, you will not have only 35% win percentage. You will have better than that. With a good strategy, with approach, you will have better than that. But even with 35%, you can make money if you have positive reward risk ratio. And there are traders who can even build strategies with 3-to-1 positive ratio, and then they can be right only 25% of time and still make money, okay? Not that often, it's not stable, but still making money. So the point is that reward risk ratio is way more important than win percentage. Now, realistically, I think that the vast majority of traders, especially beginning traders, they probably will be in the area of 1.6, 1.7 reward risk ratio. That's at least from my experience. And they will be more on the side of the coin flip. That means 50-50, probably a little bit less, maybe 45%, okay? Especially beginners. Okay, starting beginners will be a little bit below. If you already have some experiences, you do already, you can be, let's say, more like the chance, like 50-50. And of course, as you keep improving your algorithms, you're getting better and better than that. But even if you are starting out with something simple like breakout strategies or the strategies which this calculator is offering, then you actually, even with this not high average win and with this not high reward risk ratio 1.6, as you can see, you still can create really nice outcome, okay? Really good positive outcome. So you don't need anything overcomplicated. You just need a trading strategy with very decent numbers, no overfit, nothing overcomplicated like this. And now you just, by the definition of this edge, you're starting to trade for living, okay? Now, does not necessarily mean that every month will be profitable. As you can see, and this is the reality of trading you need to embrace from the very beginning, I can resample and I will, have great months, but also poor months, okay? You cannot expect paycheck every month. I will also have slightly losing months. I will have also some little bit more losing months. So the reality is that your outcome, the row of trades, the sample size, each month will be a little bit different. Each year will be a little bit different. So one year you can have equity curve like this. Other year you can have it like this, where you can be struggling for the first 5 or 6 months and then make the money you wish you made. But again, we're just playing this simple 50% win percentage and reward risk ratio 1.6. Don't forget that you will very likely, as you're building this business, you will keep improving. So very likely, maybe you will be able to get from 50% to 55%. Have a look at this enormous impact. All we did is just 5% points from 50 to 55% win percentage. All of a sudden, everything becomes way more stable. We also start combining different strategies, right? Like putting more strategies together, which will keep smoothing the equity curve even further. You will start increasing number of units, okay? So now you're more confident. So not even your win percentage will go higher to 55%, but also you will start trading 3 units instead of 1. Okay, so now with 3 units, which by the way, it's very low, nothing spectacular, with 3 units, 3 futures, micro contracts or normal contracts, from 1 to 3, you can be up very quickly. Even in few months, you can scale from 1 contract to 3 contracts. Now, even with a strategy, which is not spectacular, which is still quite normal, very average, with 55% win rate and 1.6 reward risk ratio, just 3 units, you're already making about 200,000 K per year. Now, again, can vary as we're sampling and resampling, but just considering that we're not doing anything magical here, that's a very good number. And some of you will maybe just work on the other way, which means you say, hey, I don't mind to be right in less than half of the situation, but I want to maintain my reward risk ratio, okay? So some of you will work on better reward risk ratio and potentially pushing it until, let's say, even 2.5 to 1. Now, similar effect, okay? The outcome, annual outcome, will still be quite often with 3 units, quite similar. You will not have to be right so many times. You will have higher average win than higher loss. Same results, different path. So you can basically pick between 2 different paths how you will focus, and this will show up once you start building strategies, and you will find your strength, and you will see where you are able to excel and make really good strategies. This will solidify on the go. Either way, this is the profitable math. Now, once you have these strategies and once you start increasing your units, the sky is the limit. So even after 1 year, you can move, let's say, even this one you can improve to 45%, move to 5 units, and now we're talking about 400 plus K average annual income, 33,000 average monthly income. You have to get there, right? Yeah, like you need to work your path towards that. But whatever you do, whichever strategies you trade, and again, you can start building with these strategies approach that this application suggests, which I personally think it's quite neat. You do this step by step from the beginning. Either way, this profitable math, this is the quintessential part. This is the very core. This is what you need to understand, because this is what will be the very base of your trading income and from where you will keep improving that. So maybe sounds basic, but really play with this calculator, model different scenarios. The link is below this video, tradeforalivingcalculator.com. Now let me know, what do you think in the comments below. Let me know if you like videos like this. Give me a thumb up if you like videos like this, and I'll be sharing more calculators and more examples. Ask me also what you would like to know in the comments below. I can explain more about trading for a living. Just ask me your questions. Don't forget to subscribe, because I'll be back with more videos like this, and I'm looking forward to seeing you in the next one. So happy breakout trading.